Big news recently coming out of Argosy Minerals, an Australian lithium company. They have officially produced battery grade material from their plant that they have just built over in the Lithium Triangle. Today, we're going to talk about the announcement and take a deeper look. Let's get into it. How's it going, guys? Ryan here and welcome back to another lithium stock video. Today we're checking back in with Argosy Minerals, but first and foremost, guys, Happy New Year. Hope you had an awesome break. I certainly did. Took a bit of time off from YouTube, but now I'm back and ready to kick into things, and I thought, why not get kick-started with Argosy Minerals? And they have made a very big announcement. As you're aware, they are in the commissioning phase of their Rincon lithium plant, and they have just produced a ton of lithium carbonate. And this is battery grade lithium carbonate. It's sitting roughly at about 99.76%, which is very high. And this is a real major milestone for the company for a number of reasons. First and foremost, they have actually been able to produce or prove that the facility is working and will be operational very shortly. As we know, 2,000 tons per annum is the key goal here within the next few months. They're predicting that is in Q2 of calendar year 2023. So relatively soon, they'll be ramping up to their key production milestone. And of course, we know they will be expanding in the future as well, up to a total of 12,000 tons per annum. So an additional 10,000 tons will be coming in the stage 2 operation. But what really excites me about this announcement is the fact that Argosy Minerals are now on track to be the second lithium producer on the ASX. Now, what does that mean? Well, it means you've basically got more than one option now when it comes to lithium producers. As we all know, Pilbara Minerals is the current producer of lithium on the ASX. They are in the hard rock space, but what we see from AGY is something a bit different. We're seeing a lithium producer now starting to come online. The second one, another investment opportunity, and they are in the brine space. So what they're doing is a little bit different. Now, as we know as well, they're located in South America, so completely different jurisdiction, but it is a very good and, as we know, a popular area for brine-based companies. Now, as an investor, you'll be asking yourself, well, it seems this is a pretty attractive opportunity. Now, what is the reason for that? As we know, lithium is in significant demand. There are many supply shortages already occurring, and that is predicting to just increase as we move into the future. But what really excites me is the current spot price of lithium. So we're seeing lithium carbonate basically sell for $75,000 per ton roughly on the spot market. That is a massive number. And when you look historically at when AGY and even companies like PLS and other explorers and people who are building plants originally did their due diligence, did their PFSs, did their DFSs, and ran all the numbers, they were not basing their, I suppose, fruitfulness or the amount of money that they could make from their current resource based on the current market rates. In fact, they were significantly lower. So what I encourage you to do is go back and look at what AGY had proposed in their definitive feasibility studies back a few years ago before the plant started construction, and now look at the prices and put those prices into the grand scheme of things there. What you're going to see is that the numbers are significantly higher now from a profitability perspective, which means, of course, the value of this company is likely to skyrocket. If we look at a company like Pilbara Minerals, back when they started producing, we saw they hovered around, the $1 mark, even lower than that. They were fluctuating, from about 50 cents all the way up to that $1-ish mark and then back up and down. But when they really started to ramp up production and lithium prices did start to rise, we saw that company shoot up above $5. I think their peak was roughly $5.60. Now, we're only looking at a few $100 million market cap when it comes to AGY, as opposed to looking at PLS, which is now a multi-billion dollar company. Now, what we can see though is this company is going to grow. Obviously, now they've gotten over the key hurdles. They've proved now that they are able to actually make some money and produce what is their current resource, or from their current resource. And now what we're going to be able to see is the profitability come into play when they start selling that. More than likely, in my opinion, on the spot market, because that is where pricing is the best. Or alternatively, you might see some binding offtake agreements start to come into play, and that basically secures that demand and allows them to consistently sell a resource at whatever price that may be. Probably not at the premium we're seeing on a spot price, but it guarantees that we're going to see the sales there. And what this is going to do is increase the value of this stock. And the reason for that is we aren't yet seeing those numbers actually come into play. So getting into a company which is just about to go into production, start making money, and of course has already gone through all the hard work of the construction phase is quite a good investment to look into. I certainly encourage everyone who's watching this video to do so. And now what I'm going to do is I'm going to jump into the current chart. I'm going to show you guys, I suppose, the journey or the current state of play of where AGY is sitting from a share price perspective. Welcome into the AGY chart, guys. As you can see, this is one of the better looking charts on the ASX at the moment. It has been quite a rough year when it comes to stocks on the ASX. But as we can see, AGY is a company which has certainly pulled through. Currently sitting at 56.5 cents. Now, that is a very, very good number considering that we are certainly moving in that upwards direction. And the peak was only just over here, and that was 64.5 cents. And it was only in November of last year. But what we are seeing is, of course, if we really zoom out, we can tell that there is certainly a massive trend in play if we want to go from there. But even from a shorter term sort of point of view, where we've bounced from just recently all the way through to that low point over here in June, we can see that this is a beautiful upwards trending channel that we are now sitting in. Now, why is that so important? Because it shows us that we are now starting to make moves, and I'm going to plonk it right about here. And the reason being I'm plonking it there, you can see shoots going up above these points. You can see we did manage to break out when we hit all-time highs, but came back into that trend. And right now, what we have seen is a bounce off the bottom of that. Now, given everything that's going on, likely what we're going to see is the technical side of things line up with, of course, the fundamental analysis as well. The only thing really not going well for us at the moment is this little cross we have seen right here, and that is unfortunately that 20-day moving average crossing below the 50-day moving average. But I suspect that won't be long, but it may prove to be a little bit of resistance that we do see. Volume wise, things need to pick up. I think people are waiting to see the money actually start to roll in the door now, of course. But I want to look at the MACD side of things as well. And what you're seeing is that 12-day EMA is now starting to move up after an extended red period all the way from the 24th over here, where we had a cross of the 12-day EMA below the 26-day. We're about to see the opposite occur, that 12-day EMA crossing back above the 26-day EMA, which should shoot us back above, of course, the moving averages we are seeing on the chart there. So all in all, looking relatively bullish on AGY at this point in time. Certainly very exciting in terms of what is to come for this company, and the current state of the market is showing us that this company is going to be able to take advantage of those supply shortages and of course the growing demand for lithium with the current spot rates. Even with prices maybe slightly dipping, we are still going to see that based on the numbers presented originally in the definitive feasibility study, this is a company which is going to be even more profitable than what we had originally expected. Immediately off the bat, I'd suggest our target short term should be, of course, probably the top end of this channel. Once again, if we're basing it off, you know, a few weeks time, you could be seeing the 70 marks hit once again. I'd be immediately going for this all-time high over here. We closed obviously at 64.5 cents, but we had the all-time high, which was 72.5 cents. I believe I misspoke previously, 72.5 cents, which is where we were sitting from a high perspective. Immediately, that is ultimately going to be our key target when it comes to a movement upwards in the future. That wraps up today's video, guys. I hope you did enjoy it, and I'd love to know your thoughts on Argosy Minerals down in the comments section below. If you did enjoy today's video as well, make sure you leave a thumbs up, and if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. And with that, guys, I hope you have an awesome day. I'll see you next time. Cheers.